Hey everybody, Boris speaking at Forex. Welcome to the weekly technicals for the majors for euro dollar, for dollar yen and pound dollar, July 23rd to July 27, 2018. And it's never a dull moment when Donald Trump is your president, because this week he essentially completely flipped the script on the dollar. Dollar was rallying all the way through until suddenly he decided that the dollar was getting too strong, that it was presenting a problem as far as our trade wars going on across the world, and that the rest of the world was actually devaluing against the dollar. Now, ironically enough, I think he is absolutely correct on all those fronts. That the Chinese, of course, have been involved in a stealth devaluation with the yuan. The Europeans have jawboned the euro down. All of this presents an advantage to all of those countries in terms of competing on the global stage, because it devalues their currency. It makes imports much more expensive to them. But the point being is that it created, I think, a complete change of sentiment in the FX market for the time being. Even though the rates markets did not take Donald Trump seriously, the market's still projecting more than a 50% chance that the Fed is going to raise twice. I think they may be underestimating his desire to make sure that the U.S. economy remains buoyant up to the election time. Because say what you want about him, the one thing about Donald Trump is that his instincts generally tend to be incredibly spot on. And nobody understands it better, that the U.S. economy is actually in peak growth, actually starting to slow down, actually now having a pall over the fact that trade war is really slowing down business investment, actually showing negative year-on-year wage gains because inflation is really starting to eat into growth. And against that backdrop, the very flippant, sanguine attitude of the Fed that everything is great is very similar to the kind of idiotic policy that they followed in 2008 when they walked the country straight into a global depression without being aware of just how dangerous the housing crisis was. So I think the Fed is always fighting the last war, and Trump, on the other hand, as far as his instincts go, in this case, in this one particular case, is actually quite correct, that pressing the accelerator on the interest rate front will literally tip the U.S. economy into a recession much sooner than anybody anticipates. So the net takeaway from the end of the week results, in my opinion, for right now, is that the dollar now is a sell the rally trade instead of buy the dip trade. That, I think, is the single most important takeaway as we look at trades next week. We should be thinking about getting short dollar or any kind of a retrace instead of trying to buy the dip, at least and until the levels are disproven. So we'll get into that in just 1 minute, but let's just revisit where the levels stand right now. So the euro, I think, still remains in very much this broad 1500 to 1800 zone, but now we're really inching towards that upper edge of the zone, and that's really where it's going to get very interesting. We'll take a look at that in more detail in just a second. The yen really got rejected strongly off the 113. It was floundering at 113 pre-Trump. It just couldn't get past that level, even against all positive U.S. data. Now it's really, I think, suffering, and it's going to be very interesting to see, because for dollar yen, and I'll show this to you in the charts, to truly preserve its long-term upside momentum, it really needs to hold the 111 level, the 110 level, and it may be wavering around those levels as we enter next week. So we're entering some very key points that could have longer-term implications than just simply day-to-day oscillations in the currency pair. And then last but not least, cable did broach the 30 support as we talked about, but kind of held. And I mean, cable is always a unique story because of Brexit, but cable, certainly the weakest of all the bunch here, on the anti-dollar front, does present perhaps a small bounce back towards the 32.50 as we go into the week. The calendar itself is actually very Eurocentric this week. We don't have a lot of U.S. data. We basically have existing home sales, manufacturing PMI, which is not the ISM manufacturing PMI, and that's about it on the U.S. side. Durable goods, we really don't have any major U.S. data until the end of the week with the GDP numbers. That should be actually an interesting number and we'll get into that in just a minute. But prior to that, it's really all Europe. It's the flash PMI data out of the Eurozone, and then, of course, IFO, and then, much more importantly, on Thursday, the ECB presser. And here's where it gets interesting, because if the ECB presser is not as dovish as the market anticipates, that only provides a net positive to the euro going into next week. So we'll take a look at that very carefully on the charts and see where the levels lie. The US data end of the week should be interesting for one aspect only. Unless it just blows out the number, unless we see 4.5%, the expectation is that it's going to be a strong quarter. So the only true risk here, in my opinion, is to the downside. If we can't print 4, that will be a major disappointment, because the market is so primed for a very, very fat print on GDP that anything smaller than 4, even though it'll be much better than the quarter prior, will still be looked at as a disappointment. So be watching that data very carefully. If that does print super positive, if we are at 4.3, 4.4, that could change the narrative to much more pro-dollar as we go forward. But still, remember, GDP is a backward-looking number, so it's hard to project too much forward price value to it. Still, that is the most important thing that we have going on next week. Now let's take a look at the charts here and just see exactly where things stand. So the most important thing from the euro point of view, I think, is that the 15 held. As a matter of fact, it's not even 15, it's really the 16 that held very, very strongly. And I think it's important to look here at both the weekly levels. The weekly levels here are 1575, that's the low. Let's just take a look at the monthly levels as well, because this is where it gets interesting on the monthly levels. The monthly high here is essentially 1790, right? 1800. And ultimately, it really all comes down to this particular candle. This is the candle that we've been trading literally for the last month, because this was the ECB candle that broke the back of the euro and essentially put the euro in a downward spin. Now, if this week the euro can recapture, take out the highs, which is at this point 1850, basically this is to me the very, very critical level. If we have enough power in the euro to take out 1850 to the top side, that will be such a bullish reversal of the bearish trend that we started last month that you have to get much more bullish the euro. It will then construct a very, very strong higher low bottoming structure and really put us on a path towards 120, 122. But only if we take out the 1850s. Until that point, we're just basically ranging, and now we're going to be exploring the upper end of this range. So in the immediate term, we certainly have scope to move towards the upper end of the range, and the closing this week was pretty good, especially we closed at the highs on Friday, so there's certainly some extension possible here. But time will tell, based upon the end of the week developments, I think, as to how strong this rebound is. Now, yen, on the other hand, this is the key point here. So yen very much remains in an upward channel, but now this is where it gets interesting. If the dollar really gets blown out, if the dollar really feels strong stress to the downside, this 110, 110.50 level is the absolute must hold in order to maintain the bullish posture in dollar yen. And certainly, we're certainly going to probably probe the 11s. I really feel like we're going to probe the 11s beginning of the week, and perhaps even maybe the 1050s. The critical thing is, if we start breaking down over here, that will be such a massive technical damage to the pair that then you have to be looking at it as essentially a failed top of the 113. This whole area failed, and now a big distributive top that could push us all the way down towards a support of 108. But we're jumping the gun. We really need to see where the price action goes. If the price action sort of consolidates and holds around here and essentially holds the 110s, it still remains in a long-term positive trend and could resume ultimately its move towards the 115, 120 if it can clear this 113 level to the top side. So very interesting, a lot of possibilities here. We need to watch the price action to get us a much better feel of where things stand. And here's pound rebounding off the 130 support, which was certainly tested yesterday. Nice big rebound. We actually took out the highs of both days, so it's a pretty positive candle. Suggests that we should be able to push higher here. Not a lot of cable data, and I think the Brexit issue probably, well, there's still some negotiation between EU UK negotiators, but I think everybody's going to go to the beach very soon. So we may have some quiet, and just a natural short covering squeeze here could push us up to the 32 handle as we go forward. Of course, you know, UK is almost the secondary drama in the FX market. You never know what happens. You know, if Boris Johnson decides to create a no confidence vote in Parliament, all bets are off. It's still a very volatile trade, but if you sort of assume that no news is good news, the short covering squeeze could certainly take us to the 32s at the beginning part of the week, and that's how it stands up. Let's just take a look at the weekly and the monthly. The weekly highs here take us to, this seems incorrect, 38? This seems incorrect. We were not at 30. Oh, I'm sorry. I'm looking at the wrong. I'm looking at these numbers. No, the weekly highs was 33, and that's pretty much, I think, the end of the range here for the pound. And then let's take a look at the monthlies. One last thing, just to give us a good feel for this. The monthlies essentially are 35s, so really quite far away. We're basically mid-range here on the monthlies. Sort of interesting to note that as we look at the candles. And as I said, mild, but definitely a positive move to the upside in cable as we start the week. So that's pretty much where we stand. It's an anti-dollar move to the end of the week, which I believe is going to continue at very minimum to the front of the week as we start trading in FX.